Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are on Friday, March 10th. So during this time, between 5 and 5:30 GMT, I'm going to review the forecast, what I had given it on Monday, 6th of March, for the week 6th to 10th of March. So during this Asian session live market analysis on the forecast, I will just review the forecast, what I had given it on Monday. Then we will do the market reading for today using the initial lows and the highs set around 3:30 GMT in order to find out how exactly the players intend to make the moves during the day. Then also I will give you the trade calls and explain to you what trading strategy you can use it in order to limit the risk and maximize the profit. My contact details are given here. My email ID doctor@i-knowindices.com and Skype chat ID iknowindices@hotmail.com. My website i-knowindices.com. So you can contact me if you need to get more clarifications regarding my way of trading. So basically, the trading system consists of the three components, namely the derived forecast. So many people think that if the forecast is fine and accurate, then we will be able to consistently earn money from that other market. The forecast can be accurate, but still, if you are not quick-witted, if you are not in a position to enter and exit at the right time, then you might find that the forecast has come true, but you have missed the opportunities of booking profit. So it is not that the forecast alone will help any trader to earn money from that other market. The forecast can be derived using the technical or fundamentals, but I'm using a unique scientific algorithm with which I am trying to give the forecast for the entire week. But if you use the chart or the fundamental analysis, we'll be able to understand the forecast or derive arithmetically for a shorter duration or based on the fundamentals a longer duration. But we will not be able to find out exactly which way the players intend to make the moves in the market. Because when chart is available for everyone and everyone is able to look into the chart and trade, then it is a question of herd mentality. When all are making similar trades, and how exactly they will be able to make profit? There should be somebody who should commit mistakes. Only then they lose, and all those who are following the charts and technical analysis will be able to make money. But instead of this, what the players do is they try to induce the traders to follow technical and fundamental analysis and make them wrong by making the move against their expectations. So this is the game plan of the players. So we need to understand how the players try to trap the traders from time to time. So they first of all induce the traders to develop the market sentiment and then act against that of the sentiment created by using the data release time, etc. So hence we go in for the market reading to fine-tune the forecast, and also still we use the trading strategy to limit the risk. In the event if the market goes against, we should be able to limit the risk and see that it gives alternate trading opportunity. Instead of we block the position with the equity and pray to God for the market to move in our favor. Instead, if the market goes against, then we try to use it as a trading opportunity. This way, when the market goes up or comes down, we are in a position to earn money from that of the market. Once you start earning money from that of the market, your confidence level goes up. As a result, you find you don't develop the market fear. And once you avoid developing market fear, you are able to perceive the great opportunities which arise in the market rather than becoming panic during the drop or becoming greed during the rise. So let us see the forecast, what I explained it. They are expected to make the rise and firm up and then subsequently make the slide in the market. That is what they are making, mostly the sideways move, because the non-farm payroll, which is supposed to be released on first Friday of the month, this time they are releasing it on 10th of March, the second Friday. Because of that, the volume has greatly come down in the market. And when the volume is not available, there is no point in making a big upward or the downward move in the market. So the players are just consolidating in a narrow range, and they want the traders to commit positions by creating the bearish field in other majors, and then subsequently they want to use the non-farm payroll as a trigger in order to gain the levels in the market. So today they are expected to make the swing and firm up move during that of the Japanese session, and then they are expected to make a slide before that of the non-farm payroll release around 13:30 GMT. Then they are expected to gain the levels towards close and start making a firming up move. And from next week onwards, we'll come across more aggressive gains happening after that of the interest rate decisions. So normally they wait for such fundamentals to be out so that they will be able to make the moves in the market, because they accumulate the positions holding low and then subsequently they gain the level using some excuses or using some fundamentals to their advantage and then try to gain the levels. By the time the traders enter, that will become too late for them to enter into the market. Taking a buy after that of the rise or taking a sell after that of the drop are not a good way of trading, but invariably they induce the traders to do such things. So we have to look for the slide or the false move before that of the data release and then try to take entry. Thereby you will be able to really make money from the other market. Yesterday also they did the same. They just made all the drop before that of the ECB press conference, and then subsequently they started gaining the level, and they just gained from 1.05 to 1.06 in the case of euro, but GBP they made the drop from 1.23 to 1.2150, about 150 pips, in order to create the confusion and also to handle the euro GBP cross. When there is not adequate volume in the majors, they focus on that of the crosses. So that we need to understand. Whenever they make the contrarian move, we can easily recognize that they are handling the crosses. Now the levels in which they are expected to make the swings in the market. Now, euro has made a 100 pips range only, not able to go up, but today they are expected to gain the levels in the case of euro. And in the case of GBP, they made the drop below that of 1.2275 and they are holding it, and they are expected to gain the level above that of 1.23. Then in the case of yen, they came down to 113.56 and went up to 115.25, and now they are gained more level to 115.36. So they just made the move in the case of yen on the upside, and after that of the data release, slowly they will come down in the case of USD yen when euro and GBP are expected to gain. Then in the case of CHF, they came down to 1.0073 and then went up to 1.0170 and oscillating in that range. Then Canadian dollar, they just made an upward shift to that 1.35 area, and here they consolidate for the weekend and also during the week beginning, and then they are expected to make the slide. So when USD CAD has gained the level, and they will sustain the level and then try to offload the positions what they just accumulated at the lower level, and then only they will try to make that drop without making a significant rise, so that those who have taken the higher level long as short covering and turning long in order to get back the money would see that the market is reversing. In the case of Australian dollar also, they came down to 0.7499 area and they went up to 0.7633, and then again come down, and they are holding around that of 0.75, and they are expected to gain up to 76 after that of the non-farm payroll release. So in all, you find that they just made a narrow range sideways swings, all due to the delay in the release of non-farm payroll. Instead of the first week, they just shifted to second week this time. So invariably, you find the traders are uncertain and they do not want to commit big positions before understanding the fundamental. So in the absence of volume, or in a reduced volume condition, the players are trying to handle the crosses. Now we will do the market reading. I noted down the initial lows and the highs around 3:30 GMT, and now we will compare it around 5:15 GMT to see in which way the players intend to make the moves in the market. The case of Euro 1.0572 is the low. They are not breached it, but the high was 1.0599. They just breached and went up to 1.0602 and holding around that of 1.059899. Slowly they are expected to gain the levels. Then in the case of GBP, 1.2150 is the low, 1.2165 is the high. They are not breached the low or the high, they are consolidating. So you could come across euro gaining first, followed by that Australian dollar could gain, and finally they will make an upward spike in the case of GBP, and that way they'll be able to book profit in that of euro GBP cross, and then start gaining the level in the case of GBP more when compared to that of euro. Then in the case of yen, 114.89 is the low, 115.25 was the initial high. They just breached the high and staying above. 115.36 is the new high and holding above. So they are likely to make an upward stop, and in the case of USD yen, closer to that of the data release time, and then start making a quick drop. So always before the drop, they will make an extended stop point. In the case of CHF, 1.0166 is the low. They just breached it by 2 pips. 1.0114 is the new low, and they are holding above that of the initial low. The high is 1.0131. They are not breached it. They are likely to come down in the case of USD CHF. Then USD CAD, 1.3495 is the low, 1.3416 is the high. They are not breached the low or the high. Then Australian dollar also, 0.7499 is the low, and 7527 is the new high, and 7524 was the initial high. So they just made a brief upward move and come down in order to consolidate, and slowly they are expected to gain the levels in the case of Australian dollar as well. So it is in positive net change. So you can understand that the players have just breached the high in the case of euro, then breached the high in the case of USD yen, indicating that they have made the contrarian move. Then in the case of CHF, the low was breached briefly, and in the case of Australian dollar, again the low was breached. So here you come across the contrarian move again. So the numerator as well as the denominator, they just breached the low. So they are handling the crosses with the help of the net change. We can easily understand that euro and USD yen are showing positive net change is a contrarian move, and GBP and USD CHF are showing negative net change as a contrarian move. Then USD CAD and Australian dollar are showing nominal USD weakening move. In all you come across, they are making subdued moves because the spread between that of the high and the low are very limited. So you know very well, during that of the non-farm payroll, before the data release, people will be afraid to commit positions. But still, the players will try to make some small swings to give that impression to the traders the market is alive. Now, some recommended trades for the day. When they are making a dip closer to the low, we can try to take a buy position in the case of euro around 1.05. Sorry, it should be 1.0574 and exit around 1.0650 area and keep the hedge order to limit the risk at 1.0540. In the case of GBP, when they make a small dip, you can try to take a buy and keep the hedge order to limit the risk. And the exit could be above that of 1.2260, and they are likely to make an upward spike after that of the non-farm payroll. Then in the case of yen, they are likely to come to that of 115.40 or 50 area. And if they just make a quick upward stop and above this new high, you can take a sell and keep the hedge order to limit the risk. And once the position makes profit, we can keep stop at entry. Then after the non-farm payroll, they are expected to make the drop. At the time, we can book profit. So then they will make the USD weakening move in the market. Now these are all the market timings. From next week, we will find that US, the daylight saving system, is coming to effect. As a result, the session timings will change. I will show you on Monday what are going to be the session timings. Then I'll give my next Asian session live market analysis webinar on 13th Monday between 5 and 5:30 GMT. And today, before that of the non-farm payroll data release, I'll be giving the spike trade calls. So the spike trade calls by 11:30 GMT, the pre-non-farm payroll data release time, I'll try to give the recommendations, what sort of trades we can do. And after the event, around 15 to 15:15 GMT for about 15 minutes, I will try to give you the results of the recommended trades and explain to you how exactly the players are trying to trap the traders by making quick moves in the market. So all quick moves are false moves in the market, so that we need to understand. If you got any question, you can ask me in the question and answer window. I'll be willing to answer those questions. I will show you the forecast sheet. Yeah, there is a question from Bren. I know you have said that the net change is important within the majors as far as pointing out the USD gaining and the USD weakening moves. But do you have to pay attention to any of the net changes in the crosses? No. Because see, basically the players use the net changes, the case of majors, for their uh, market moves, because they cannot make uh, move as a one-sided move indefinitely. They have to limit the risk, or they have to limit the moves to 150 pips in the case of euro, 250 pips in the case of GBP, etc. So if they want to just make a move in the cross, for example, in the case of euro yen, how much they can drop? Euro, they can make a drop about 150 pips. Then USDN, they can make a drop of 200 pips. So making these two on the downside as the contrarian move, they can drop about 300 pips in the case of euro yen. So if you look into the euro yen, which will not give any clue for you, you have to find out in which way the contrarian move happens, and see that they don't breach the new low in the case of euro, new low in the case of USD for about 30 minutes of your observation. Then also the new low in the case of euro yen for 30 minutes during the mid session. Then you can try to take a buy. So instead of going for the mere net changes in the case of crosses, if you relate it to that of the corresponding majors, you'll be able to think in line with that of the players' thinking. See, ultimately, we are trying to understand the players so that we try to read the intentions of the players. So in the process, whatever the tool the players use, we have to use it. And we can imagine about so many possibilities and continue to do that in various other type of analysis, but they may not be relevant for us. They may not give us any appropriate clue. Hope you are able to understand the question, Brent. Answer. If you still have any question, kindly ask me. I'm willing to answer to those questions. That's why I'm keeping the live market code page only limiting to that of the 4 majors and 2 commodity pairs, not the crosses. If you watch carefully, you will be able to really appreciate. With the help of the majors net changes, I'll be able to read and tell you what is happening with regard to the crosses. So when you are focusing on crosses for trade, at the time you can see both the majors as well as the crosses to fine tune your entry. Any other question, please? So they are expected to make the slide before that of the non-farm payroll and then spike up after that, similar to what they had done yesterday for that of the ECB press conference. Then continue to firm up during that of the US session. And you know very well, the players create the market sentiment and act against that of the traders. So far, they have created a bearish feel among that of the majors. And so you can easily read what their intention is. Create the bearish feel and buy when the traders are liquidating long position distress condition, and later on spike up using some SQs or a data release. The data may be positive or negative to that of the currency, but still they can try to give any sort of interpretation and make the moves of their choice. Satish. Okay. Any other questions, sir? Okay, no questions coming forward. So I'll just conclude the webinar. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. And I will be giving the spike trade calls before and after that of the non-farm payroll. So watch for how exactly we can capitalize the situation and earn money from that other market, and that will be able to really give us enormous profit making opportunity during quick moves of the market. So see you all during that non-farm payroll pre-spike trade, pre-non-farm payroll spike trade call, and also during that of the after the impact of the non-farm payroll in the market, how exactly the players are making the moves. So wish you all the best in your trades. See you again during that of the spike.